Thank you very much for having me up to Scotland. I'm sorry I'm English. It is very kind of you to have me up here, and I'm sorry about my accent as well. So, Environmental Farmers Group was started about 3 or 4 years ago, down in central southern England, so in the sort of Hampshire, Wiltshire, Dorset area. We've got essentially lots of cluster, let me see, oh you can see that red dot there. We've got lots of clusters in this catchment, so about 10 years ago groups of farmers came together to look at doing environmental projects voluntarily together. And since then they've grown and cover something like 20–30% of the catchment. However, about 4 or 5 years ago, there was a worry from the clusters and also from the Game and Wildlife Conservation Trust, which is based in that area, and that's why the cluster movement is so strong, that with the loss of BPS, which is the funding for farmers in England as elsewhere, with that reducing down, which was going to cost the catchment 37 million, and also the emergence of the natural capital sector, especially in that location. So we have strong housing demand, and I'll talk a little bit about how that's driven the model as well. But essentially the farmers from the clusters got together and said that they wanted to do something a little bit bigger. And so they decided to create a natural capital cooperative. So they brought in a person called Christopher Sparrow, who's this guy, who's my boss. He used to run the Duchy of Lancaster estate and also the Duke of Buccleuch estates for 9 years as well. And he was brought in to design a commercial model. And so what he did was he set up an independent farmer cooperative, completely farmer owned, and then also a subsidiary of the Game and Wildlife Conservation Trust called Natural Capital Advisory. And the idea was that the EFG would have a farmer board of directors made up of those founding farmers, and then members would join the cooperative, and I'll come up to how they do that in a second. But ultimately GWCT had the administrative capacity that those farmers did not, and so they wanted to set up essentially a subsidiary. And so the overall objective of the cooperative was to deliver environmental change on a landscape scale by ensuring fair financial reward for farmers. So it's making sure that farmers are getting paid profitably for delivering for the environment as well. And so how does the model work? So to become a member, a farmer pays £1.25 per hectare per year. They get advice from the small team that we have on natural capital and the opportunities that arise. We attract in opportunities, and opportunities might come to them directly. They trade through the cooperative, so all natural capital is traded through the cooperative, but ultimately the farmer retains control of their land and everything is done between the farmer and the buyer, so the cooperative doesn't take a stake in the project, so to speak. But the farmer does share any income received. So 12% of their traded income is returned to the cooperative. 3% goes to the cooperative to run the cooperative, and 9% is shared with all the other farmers on a per hectare basis in that area. We're also working with farmers to build farm plans, so looking at on a farm where are the key natural capital opportunities and what sort of things do farmers want to do themselves for the environment. Because the key thing for us was that this is an opportunity for farmers to take control with their own hands rather than just being at the end of the queue. So what do farmers want to do? So we sit down for an hour with an ecologist and a farmer to work out what sort of things they want to do on the farm for the environment. And then the idea is that in time we'll be able to pull these all together to build cohesive landscape scale environmental plans. But the key benefits of the cooperative is that it's farmer run and farmer owned, it's maybe not for this audience. Single point of contact to buyers, becoming price setters, not price takers, and having a simple model. So this is what we've done so far. So we have 600 farmers covering 400,000 hectares who have signed an expression of interest or become a member. We've got about 76,000 hectares of actual paying members themselves. And this will be the biggest organisation from a natural capital perspective in England, and covers just over 4% of England's farmed area. On the trading side, so we've got a £21 million trading pipeline, and I'll come on to natural capital markets in a second. I was just going to go through our structure for a start. And we've completed on £1.5 million of trades, and those are mainly in this central southern England area. The numbers are very different to Vane Valley, I'm afraid. And then also with our farm plans, we have so these are the farm plans where we're sitting down with the farmer. We've identified 6,500 hectares of land that farmers want to put forward themselves into nature projects. And so far we've got 16 projects being registered in the natural capital markets altogether. In terms of our strategic objectives for 2029, so we want to onboard 400,000 hectares of members, so all those expressions of interest we've got, we want to onboard to members. We want to have an annual trading value of £20 million, so that's the trading value of members, not the cooperative's own trading value. And then 2,500 hectares begun for nature recovery. And that might seem a little bit small, but that's permanent change. So that's permanent land change being paid for over that period of time. And the area in blue, so all these blue dots here, is from the farm plans that we've done. So these are the areas that farmers themselves want to put forward towards nature recovery. So it's really impressive in what we can create on a landscape scale. And the key thing for us is that no other organisation can do this, only farmers can. And so the benefits for us in the market, so looking at our competitors, how are we better? So firstly, to have an impact. Farmers manage 72% of the UK's land area, so we're not going to be able to address environmental issues without farmers. Farmers are going to be key to doing this, and we want farmers to drive it. So they've got to be involved. Secondly, to meet demand. So, of course, these businesses don't want to go and talk to loads of farmers. They want to be able to deal with one person through a single point of contract, which, again, is why the cooperative model works so well. And, of course, all these farmers need to come together. To reduce the risk, so of course in these markets not everyone's going to be able to contribute in the same way all the time, and so by doing it in a cooperative style we're able to spread that risk over time. So for example, one of our markets that we're working in at the moment, you have big lumpy sums, but really only one or two farmers in any area will be able to provide into that market. So that supports other farmers through that single market. And then, of course, ensuring a fair return for providers by working at scale, we're working with power. Our main challenges, so just running through our main challenges, having grown. So firstly, our competition is very well financed. So we're completely self-funded so far. We've been profitable since the beginning, small profits every year, breaking even just a little bit more. But ultimately, we're fighting nicely against wildlife trusts, big charitable organisations, as well as investors. So we've got a lot of investors buying up land, partnering with farmers, etc. And so we've got to compete against those people. Secondly is the bottom-up versus top-down. So this was very much a bottom-up model. The farmers started it themselves. But when we get interest from other parts of the country, how do we manage that in terms of bringing it together under one cooperative style? So that's what we're challenged with at the moment, because of course it doesn't necessarily work for everyone. And then communicating the simplicity and fairness to farmers. So for us it's all about balancing between the simplicity of the model to make sure it doesn't get too complicated and can't be described, but also balancing that with the fairness to make sure everyone's getting a fair deal from the cooperative. Switching it completely off the organisation, now looking at natural capital. I don't know how much of an understanding people have, and I've got a very English focus for you, so apologies if this is way too basic or too English. Natural capital essentially splits an ecosystem into the ecosystem itself, and then the ecosystem services that provides. And so an ecosystem might be a woodland, and then the woodland might provide carbon sequestration, it might provide increased biodiversity, it might provide cleaner water or water retention. And it's this stuff on the right that is saleable. So this is the stuff that's tradable. Quickly moving on, so the main principles of these markets is number one, additionality, so you have to do something additional, and number two, permanence. And really this has to be permanent change. And so you can either improve habitat or the land, or you create something new. And then to be able to trade, you have to trade in a market, and those markets have their own structures. So this is probably more familiar to you than it is to me, the Woodland Carbon Code. Essentially you have a project that wants to do some new woodland. The Woodland Carbon Code have created a methodology to measure how much carbon that sequesters over its lifetime. We have a verifier, the Soil Association, who come and make sure that those calculations have been done correctly, and then we have a registry which holds the credits that are created, and you can trade them through that registry. And so that's how a market structure works in the natural capital space. And so what are the main natural capital markets and opportunities at the moment? And again, this is England. So these are the main opportunities. There's a couple more, but these are the main ones we see for farmers. So you've got voluntary markets, which is where companies are voluntarily committing to something, and then you have regulated markets, which is where government have brought in legislation to mandate stuff. And so on the voluntary side, we have carbon. So there are about 11,000 companies that have signed up to the Science Based Targets Initiative, which is where they commit to getting to net zero over a certain period of time, and in some cases will require purchasing carbon to be able to get there. And so farmers can create additional carbon sequestered in the soil by changing farm practice or continuing good practice as well. And for us, we've reviewed 10 different providers out in the market and have identified 2 that we're promoting amongst members because we think they're good enough based on the scientific evidence that we've been provided. And we think there's an opportunity that can earn anything at the moment between 50 and 100 pounds per hectare per year for farmers, but we hope for that to increase, but that's over your productive land area. And then the other 2 markets are really driven by legislation. So this is English legislation where housing developers in England have to offset their impact on biodiversity. So you have biodiversity net gain, which was brought in 2 years ago, where every new house that's built has to offset its impact on biodiversity and add additional biodiversity gain. And so developers can buy credits essentially off farmers who are creating environmental projects elsewhere. And so, for example, a farmer might create a scrubland, a developer over here might be building on grassland, and then the developer can purchase some of those scrubland credits from the farmer. You're committed to 30 years, so your project is a long-term project, it's 30 years in that way, but you do get your money paid up front by the developers, so you're getting quite hefty lump sums early on. And you're looking at a return of between £50,000 and £75,000 per hectare gross margin. And then Nutrient Neutrality acts in a very similar way, but is looking specifically at offsetting water, so the impact of housing development on water in specific catchments in England as well. Again, long-term commitments and purchased by developers. And then finally, our view on the opportunity ahead. So firstly, we think that natural capital is really going to be driven by business need. So it's looking at flood risk, it's looking at water usage, it's looking at dirty water, and being able to address some of those issues, so our focus is on that. Investment is going to be key, so aggregation on both the buyer side and the supplier side. So we're doing our job in terms of bringing together the supply side, and there are other organisations who are starting to bring together the buyer side. But ultimately, investment is essential to be able to stimulate the market. And then finally, we think that government will drive this market, but it'll drive it quite slowly. So it's committed to getting £1 billion investment into natural capital by 2030, which I think it completely will do. And eventually it will bring in additional policies to mandate companies to contribute to environmental recovery. Okay, I think that's it. The only thing I was going to say is that the market size-wise, at the moment we think the markets are probably worth about £170 million in England, and in 5 years' time we think they're going to be worth about 500 million. So that's the sort of growth of those markets and the size of them. And thank you to NFU Mutual as well from us, because we're our key partners too. Okay, thank you.